But what we're interested in is to hear about the tax accomplishments for this past session. And then what do you think is likely to come up in the 2023 session? I noticed that you're on a special tax committee. So congratulations on that. We're glad that you're on. But we're very interested in your feedback. Taxes is a topic that's that is, everyone is interested in that topic because it affects their pocketbook. So I'm going to just turn it over to you, and you take as much time as you need to explain all that.
Very good. Well, first of all, Sherry, thank you so much for having me today. State Senator Tom Holland, 3rd District. I've just completed now my 20th year in the legislature, and for several years now, both in the House and the Senate, I've been the ranking member on the both the House tax and the Senate assessment taxation committees. And so it's a topic that's very near and dear to my heart. Obviously, as you well know, being in the legislature, taxes always has everybody's interests. And I can just tell you, for my first days in the House, my district, whether in the House or in the Senate, it seems like the number one thing people always had that they were concerned about was the ever rising their residential homestead property taxes. And so anyway, so to kind of get things kicked off here, Sherry, what I would like to do is just kind of point out to the group kind of like really 4 or 5 things that I thought were pretty significant, and not necessarily from, these were necessarily, Chamber of Commerce. When I say I mean like the State Chamber of Commerce. Typically the State Chamber is very much interested in, corporate tax, basically cuts and things like that they go after every year. But to me, the things I want to focus on are really what I think more affect basically our citizens' pocketbooks, and that we see some relief that was given this year. I believe that's really going to come back and make for a very positive influence in our communities, because as we obviously all know, particularly your small business, and you're very much tied to, your neighbors' interests and in your business and your services you provide. Basically, the more dollars available to spend, it really does help the local community interests. So given that, what I'd like to do is probably review, as I said, probably to me 5 or so what I thought were the big items. And then I can talk about very briefly some other things that were done for businesses, and then open it up for some questions. But I'm definitely, I think the session was going to be from 6:30 to 7:30. I'm not keeping anybody here that long. You may all want to talk about other things outside of taxes, but I think after about 15, 20 minutes, you're going to be sick of me as it is. And so you can get on and do whatever else you want to do. So the first thing I want to talk about is the Governor Kelly's Axe the Food Tax plan. We got something passed. Unfortunately, it was not what I was hoping for, nor was the governor hoping for. And just kind of just a really brief history lesson. Prior to the beginning of the session, at the beginning of the year here, the governor came out with a plan to fully repeal the state sales tax on food to zero, to get that down to zero by July 1st of this year. And when you look at the basically where we're sitting, cash reserves or ending balances, we have more than enough money that we could have made this happen immediately. When we talk about basically dollars savings for families, depending on who you talk to, the experts, whatnot, when we talk about food sales tax, the state portion at least, we're talking about the typical Kansas family saving $400 or $500 a year upwards on basically not having to pay state sales tax on food. And so from I'm a small business person. my wife, we run a number of small businesses here. And, particularly when you have clientele customers live in the community, when you think about, your fellow neighbors with an additional $400 to $500 in their pocket every year that can come back into the community, whether it's to buy, more items, maybe it's to buy services, maybe it's to fix a car, maybe to buy, whatever it might be. And we do know, unfortunately, that, a lot of our Kansas fellow citizens, I mean, they're one, medical disaster away from financial ruin. I mean, $500, I mean, that's a lot of money. And so while we did get something passed, the actual plan that got passed was basically, we're not going to be reducing any of the state sales tax on food until January 1st. I believe it goes from 6.5 to 4% at that point. And then January 1st, 24, it drops, I believe, another 2 pennies down to 2%. And then in January 1st, 25, it goes to 0. So it does eventually get eliminated. I am happy that we got something done. But unfortunately, this was something where the governor came out with it. It was really viewed, I think, as something the Republican legislature did not want to give the governor a win for. I know I tried as ranking to actually force votes on all senators on the Senate floor on the governor's tax, and finally got it done in the waning days of the session. But we did not pick up, we picked up very, very few Republican senators that are willing to support that. And that's unfortunate, because once again, this could have been real stimulus to our community. So we get a little bit of it. That's good. I'm glad we got rid of it. We got something. Something's better than nothing. It eventually goes away. But your follow-up question, Sherry, about as far as what might we expect, for next year? My guess is, particularly depending on who's elected for governor, my expectation would be is that could be one thing that gets basically moved down to 0 real quick. Because as I said before, you look at our ending balancers, there's no reason why we shouldn't have done that in the first place. So that would be the first item I want to talk about. The second thing I'd like to talk about, as far as what I thought was really beneficial to homes, well, actually to our communities. And this was actually a bill that I've been working on for the past 4 or 5 years. I introduced it. This was my bill. I wrote it. I've been trying for 5 years to get this thing through the Kansas legislature. And it's called the Golden Years Homestead Property Tax Freeze Program. And this was a program that we actually finally got passed this year. Instead of having my name on it this year, I've actually had a Republican senator introduce it. Well, actually, I just introduced it as a committee bill, but not my name on it. I got rid of the Golden Years name off of it. My thought is just to let the Republicans push it, because there were a number of Republicans that really, really liked the plan. And so basically, they got their name on, they put it through for me. And so it got done. But what this plan does is basically, if you are a senior 65 or older, or if you are a disabled veteran, 50% or more physically disabled, you basically can quote unquote freeze your property tax rates based upon the year when you qualify for the program. Now, this is limited to homes that are valued at $350,000 or less. It also is limited to those those homestead incomes. And when we talk about homestead incomes, it's basically the sum of the income for any adult living under that roof, the $50,000 or less. But what this does is if you hit those qualifiers for your first year, then every year after that, you actually pay the homestead property taxes you paid on that base year which you qualified. And so I just cannot tell you how many particular seniors that have been really frustrated, and understandably so. They're literally getting taxed out of their homes. They're forced to sell their homes. And so somebody comes in the morning and buys up their place. Obviously, we know in Northeast Kansas in particular, homestead values just keep going up and up and up. And, when you see national reports, calling like, for example, Lawrence is part of my district. I believe Lawrence is like one of the top rated places, there's been identified to retire in Douglas County. You got a lot of great economic development things going on in Leavenworth County. You've got people moving in. You've got, once again, development popping up. Okay, Northeast Kansas, is a great place to live in long-term in the state of Kansas. And so I think, once again, just like the food sales tax cut, this puts more dollars in seniors' pocket so they can stay in their homes, until they pass versus having to sell and downsize. And once again, means more dollars for our local businesses in the community. So to me, that was a very big deal that we got done. My guess is that program will only grow in popularity, and you will see the legislature coming back in the not too distant future to allow higher value homes to participate in that program, as well as to probably raise the maximum income levels for seniors and physically disabled veterans to participate in that program as well. So that's to me was another key piece. Need to brag about something else, since we're talking about things that affect businesses. A couple other bills that I specifically wrote and got passed. You will recall we had, I believe, in June 19, the EF4 tornado through Linwood. And at that time, Doug Smith, Leavenworth County Commissioner, came to me and said, "Hey, can we put together some sort of like a voluntary abatement program where if there's like a natural disaster that the county, not that they have to, but they, on a may versus a shall basis, if the county commissioners want to, that they in fact could, abate property taxes for property." And the situation you have here is that everybody knows they get their valuation notices, in the spring, I think it's April sometime, whatever, for their property, right? And so the problem is that if you have a disaster that comes along after that, basically you are stuck paying that valuation notice because it's for taxes on the whole year. Okay, it doesn't automatically go away just because a tornado came along and blew your house down. So we made a change to the law where basically it was any real property that was damaged 50% or more, and if it was due to a naturally or a governor declared state of disaster, natural disaster, then in fact the county commissioners could, if they wanted to, abate that property, i.e., you as the property owner would pay your tax, but then you would be allowed basically to basically get an abatement on that in future years to, in essence, pay you back for that year. And so that went through. Obviously, for the natural disasters we've had for tax 2019, they're going to allow permits, the law, to get that put through December of 2022. You have to file those to go to your county commissioners to try to get an abatement for the past natural disaster that would specifically apply to the F4 tornado that rolled through Linwood and Douglas and Leavenworth counties for those properties destroyed. Another piece of what I thought was very good business, the tax legislation for communities. This was something else that I wrote on my own. Once again, as I shared with the group, I run a number of small businesses. One of my businesses was able to receive PPP benefits. I also know that a lot of businesses that struggled through the COVID thing, they did not get anything from their community bankers. And my perception, probably more on hearsay, anything else, is that you probably had a lot of both poor rural businesses, say like beauty barbershops, things like that, as well as poor inner city urban businesses that did not get those PPP dollars either. And so I, along with Senator Mark Steffen, we actually got together, and he had the same desire to do something for those businesses that did not get, those PPP dollars. did not get access as much to those federal grants. And so we put together something called the COVID-19 Retail Storefront Property Tax Relief Act. And basically the idea is you're getting some sort of a rebate on the property taxes you paid, your business paid, when your business actually was either forced to shut down or got its operations curtailed because of COVID. Whether it was the county health officer or maybe the state did something, whatever it might have been, where some authority or the county, say, told you to shut down or curtail your operations. It was a mechanism by which you could basically get a rebate on some of those property taxes you paid during those absent or curtailed operational hours. And this is specifically for, tax years 2019 and 2020. If your business happened to go out of business, you can still basically qualify for that. You basically just have to, there's just some financial criteria you have to meet that I believe you have until April next year to get to turn in a request to the Kansas Department of Revenue. There's actually federal dollars that they have grabbed, Department of Revenue has to pay for this. And so it's not even hitting our state general fund. So, but this was something that our tax committee, as I said, I had a strong interest to do. And so we got that legislation passed as well. Some other things that have occurred, a couple of the notables, there was another, an additional residential property tax exemption bill. If you notice that, we have the 20 mil uniform statewide levy for our schools, and on residential property, there is basically a $20,000 valuation exemption on residential property. That got raised to $40,000, and this is for obviously all, residential properties. So basically, everybody in the state who's got a residence is going to get an additional approximately about a $44, $45 cut in their property taxes. Why I wouldn't necessarily say cut because it may still be going up, but at least you're going to pay $45 less than you would have because we're exempting out to $40,000 on the residential property. And that's for everybody. So once again, that's going to help everybody. And then you have the golden years. So basically I was very pleased we did get some subset of property tax relief for Kansans. And then probably the final thing, probably not as much really to do with anything, but I did also introduce, and I got an idea from Senator Karen Tyson. She's the chair of the committee, about basically providing teachers an income tax credit. And so I introduced a bill, $250 income tax credit, basically for teachers, where they are basically providing receipts on classroom materials that they're actually spending out of their pocket for their students. And of course, they have to provide receipts. And it can't be carried over to future years. It's not fully refundable. But just the thing we wanted to show our teachers because they're getting pressed for everything else like usual. And so anyway, so those are kind of the major pieces of tax legislation that I really wanted to talk about in general. There was some, I would say, higher level business pieces that got done as well too. There was something called the SALT Parity Act. If you recall, we had the whole SALT tax debate, not so much, this is really more the federal level during the Trump administration. And this is where you'll recall that the federal level with the Trump tax cuts, there were some changes made to the way that certain states, and this was really more for the northeastern states, I believe, how they could deduct their taxes on certain things in their federal returns. And so this is some flow down basic legislation from that. I will not speak to that at all technically. Basically what it does is if you are a business here in Kansas, there's certain pass-through entities that basically allows you to pay state income tax at the entity level rather than being paid by the individual owners of the entity. So go talk to your CPA about that. That's as much as I can tell you about that. I'm not going to even bother with anything more detailed than that. As far as other business related types of things, there was a short line railroad infrastructure credit. This is something that Watco and some of the class one railroads were pushing for. Once again, tax credits to help build out, maintain short line railroad infrastructure, really to help basically our poor rural regions of the state. And then there was an aviation aerospace tax credit done. And this is basically stuff for both employers of aviation employees as well as the employees themselves being to enjoy certain types of income tax credits for various things. So those were really kind of the highlights of what I saw. And just so you all understand, we've gotten to this habit of the legislature where anytime we pass a tax legislation, it seems like there's 37,000 different individual bills that get slammed into these things and bundled all up together. I think the general thinking by Republican leadership is that, well, there's something in there for everybody. We can get it all through. So it's like, okay, whatever. And this bundle was no exception. But I will say this in supporting this mega bill, this 2239, I believe it was. I do think there's a lot of good policy pieces in there really for Kansas citizens for once, and not just the special interests. And the fiscal notes overall, I thought were very responsible. And so, you know, I felt really good about that. As far as next year, what's going to happen, once again, I think as far as future tax policy, we need to get through the elections. We need to see who's going to be governor. I would also contend we really need to see what's going to happen with the economy. I think those two things are really going to drive about what happens to taxes next year. And yeah, we are having a tax interim this summer. You know, and I guess we'll see what comes out of that. You know, I don't know what is on their plate and what they're going to do with that. So I guess with that, I probably run longer than I told you I would. I don't know what time it is, but anyway, I'd be happy to you know, take some questions and you know, just any thoughts, perspectives you all have, comments, criticisms, have at me. I'm ready.
Questions, anyone? Well, I'll ask you. Go ahead, Cooper.
Oh, I was just going to ask about what is it, SB 2239, the whatever the golden years was, they got rolled into that. Are they? Is it still the same basic formulation as when you'd previously introduced the golden years tax credit or tax cut or however it was framed?
Pretty much, yeah.
Okay.
We actually tried to make it more generous in past years, particularly the last year. And we had just there were certain folks that had some fiscal concerns about that. And so we started off lower at the 350,000 to 50,000, you know, annual income level. But we do have one thing in there that wasn't in there before that I think makes it very workable, is from the standpoint of, you know, obviously with property taxes going up and up and up, you need to have something in there saying once you qualify, you know, you can't fall out of it, i.e., you know, say if you had a $350,000 cutoff and say the first year you qualify, say your house was like worth 330. And I don't know about you all, but like my own valuation for our home went up over $50,000 since last year. You don't want people basically initially qualifying and then falling out because all of a sudden their valuation went up above the minimum when they, in essence, really haven't done anything materially different, you know, to alter the value of their home. And so that was one thing we have in there, is basically once you qualify, you stay in. Once again, I think to rightfully protect seniors and their investments.
Do you think that's a possibility to get done in the next session, or a good reform for that bill in the future? Or I guess law now?
Wait, what's that now? What's the reform you're asking for?
Sorry, that you're going to, does the current bill or the current law as structured prevent people from falling out of it? Is that what you're saying?
Yes, yes,
Or
it
is that
does. No, it
it does?
prevents it from,
Okay,
yes. So I was
got
very
it.
pleased we got that in.
Okay, I
And
misunderstood.
no, and that's my fault. No, it's in there. And, you know, and this is just my perspective. And this is Tom not being a partisan, but just here's my take on what's going on in the state of Kansas. Is that when you talk to experts talking about, you know, the growth of what's going on in the state, you talk about the migration, you know, of people across the state. When you look at the state of Kansas, you have, I view it at least as basically kind of like 6 geographic areas. You've got basically Northwest, North Central, Northeast, which is where we're at. And then across the southern half, you've got Southwest, South Central, and Southeast. All right. When you look at what's going on tax wise, the areas that are generating, which areas are the net tax revenues generators, and which areas are actually what I would call the tax revenue sinks, i.e. consumers, it really comes as no surprise when by far Northeast Kansas is just killing it when it comes to being a revenue tax generator. My impression is that South Central is probably, they generate a little bit of extra revenue, but not much. But then you basically have the 4 rural parts of the state, Northwest, North Central, Southwest, Southeast. They're not generating anything. They are basically sinks. They are basically sucking monies out of the state general fund. And the reason why that's going on is when you look at the overall property tax, you look at the property tax rolls of the different regions, you know, when you're talking about primarily a rural region, it doesn't generate much property tax. And as a result, what you see, you know, Ross Perot talked about the giant sucking sound of, you know, you had the debate about NAFTA and the jobs going to Mexico. To me, there's this giant sucking sound coming out of the state general fund of basically, you know, when you basically pay equalization for schools and you're trying to fund roads and services for these rural regions of the state, they can't pay for their stuff. And so you see that those general state revenue monies coming out of the state general fund and going to those regions. And so when you talk about citizens of the state, their tax burdens, I would just contend that by far citizens in Northeast Kansas are the most disproportionately taxed. Because quite honestly, the rest of the state needs Northeast sales tax and either they just need to pay for stuff. And so, you know, that's just one of the challenges we deal with. And when you talk about migration, what you're seeing is they talk about Northeast Kansas by like 2030 or whatever it's going to be, 53% of our state's population is going to live in Northeast Kansas. Okay, so when we talk about economic development in the future, you know, we really need to understand, you know, industrial agriculture, while that is certain for, you know, obviously that's the big thing for certain regions in the state. When you talk about what really keeps the lights on, okay, it's really Northeast and to a certain extent South Central and their aviation base. That's what the future of our state is. And we have got to put together economic development and tax policies, okay, that recognize that and that aren't tied to the continued subsidization of industries and business models that maybe might have been great during the 1800s, the 1900s, but they just don't, you know, really, you know, keep stuff going for, you know, the 21st century. So anyway, I just wanted to share that. And so probably too much pontificating on my part, but I really do think that is going to be the challenge for the state of Kansas going forward, is recognize that over half our people are going to live in Northeast. It has nothing to do with agriculture. It has nothing to do with fossil fuels or energy or stuff like that. Okay, it's all in basically, you know, basically advanced manufacturing, services industries, things like that, medical. And we got to figure out, you know, how we harness that and you know, leverage that type of power to really to grow this state so we can attract the right people to invest in those types of industries going forward.
We have a question in the chat. It's with increased revenue brought about by increasing property values, the state of Kansas cut or reduced several taxes. Nationally, the price of new homes are decreasing. This should lead to decline in property values. How do you think the state of Kansas will make up for tax reductions and the decline of property taxes in the coming years?
No, that's a great question. So when everybody, at least in Northeast that I'm running into, valuation notices are going up every spring. They're going up and up. So how does that happen? Well, we have something called the CAMA system, which our county offices use. That basically is a computer program. Basically what it's doing is it's looking at basically recent sales of homes that are similar to yours and using that to figure out, okay, what is quote unquote the fair market value of your property. And so when you see articles like, in Northeast Kansas is viewed as a desirable place to retire. When you have continued people either from other portions of the state coming into Northeast or coming from outside of the state coming in, those property taxes will continue to go up and up and up. It's the rest of the state that's going to really fall behind. Their property taxes will fall because once again, they will continue to lose residents. And so as far as I don't want to say this. And also keep in mind too, one of the problems we have that exacerbates what people are paying for residential property taxes is basically, what particularly cities do on the commercial side. I mean, every time, and I'm not saying they shouldn't do this, don't get me wrong. But the point is that, when you're trying to attract businesses into your community, it's like, okay, we're going to pay, your property taxes. Well, guess who picks that up? It's everybody else. Another thing, actually, I was personally glad to see is I believe last week, the Kansas Supreme Court overturned this dark store theory that the Chamber of Commerce and Target and Walmart and certain big box stores have been promoting. Basically, this concept is that when you're trying to basically figure out the value of a big box store, that you need to basically, you can only value it as if it's sincere. If it basically is empty, it's dark, it has no business. Our legislature, this Chamber of Commerce 3 years ago, I think 2 or 3 years ago, they really pushed through some statute changes and they actually tried to influence nomination for the BOTA. But when the state chamber, when the big business interests want to do things like implement a dark store theory that really minimizes the property tax burden of these big box stores, keep in mind that's another tax pressure that gets passed on to everybody else. And when you're talking these stores, tens of millions of dollars in valuation differences, depending upon what theory you want to use. That's a chunk of change coming out of residential homeowners' pockets, particularly when you also understand that in, say, places like Northeast and South Central, residential property is probably like 75% or so of the property tax base of our more populous communities. And so that's going to be the workhorse for your property tax revenues. So nothing is in a vacuum. And when we talk about trying to minimize property tax burden for our residential homeowners, to me, if you want to have healthy communities, you want people that can buy homes, they can grow in their homes, they can die in their homes. Okay. And that you have enough of a healthy housing stock. Okay. So as growth occurs, you have some housing stock to absorb those influxes. But to me, we have gone out of our way, both as a legislature at the state level and then at our local government level, where we provide these property tax cuts, incentives for businesses. We've got to basically recognize there's a tension there, because it's like squeezing a balloon. If certain parties aren't putting enough in, it's going to come out of somebody else's pocket.
One of the things that our local county commissioners have talked about is the ad valorem tax return back to them. Do you see that being reinstated, or do you think the special tax committee will discuss that topic?
I don't see that happening, and let me tell you why. First of all, I'm personally not sold that that's going to fix anything. And the reason why I say that is because when you hear people talk about the ad valorem tax, typically that's a request coming from the more rural legislators across the state. And when I talk about the giant sucking sound coming out of the state general fund, those more rural areas typically aren't paying for their fair share. They can't pay for their schools, they can't pay for their roads, they can't pay for a lot of their services. And so you see the state out of the general fund picking that up, i.e. dollars coming primarily from the Northeast Kansas citizens. And so to me, if you're going to have a discussion about ad valorem, that's a good discussion to have. But I think if you're going to have that discussion, I think we also need to have a debate about, quite honestly, is ag land fair market or fair use value? Is that really appropriately taxing ag land at this point in time for the state? Because that's a big problem, is that ag land from a tax collection standpoint for these rural counties, it doesn't keep the lights on for them. And so what you're seeing is that, when you look at ag land in some parts of the state, I mean, you see these astronomical values that people are paying for ag land, and then you do a little bit more deeper digging, and you find out that a lot of this land being bought up in vast tracts, it's not being put back out to, it's not being farmed. It's actually being bought for basically tax avoidance purposes. There's stuff called 1031. I know it's like IRS 1031 transfer rules, where basically if you are an investor or a developer or something, and you're selling some significant assets, a great tax avoidance scheme is basically to take those monies, those capital gains, and roll them into something else like farmland. And so, in fact, this is something I found really interesting. A lot of the farmland in Kansas now is actually owned by out-of-state folks, either investor groups, actually farmers up in Nebraska, because a lot of people realize that the tax valuation, the tax assessment on farmland, it's just undervalued, and so it makes an extremely attractive investment from an investment perspective to buy that farmland. So I mean, we can talk about ad valorem, but I think we need to look at the value of how we're taxing ag land itself to bring that into the discussion. One of the interesting things, and I found this really interesting, is I got in the legislature in 2003. Back in 2002, there's actually a rate within statute, I believe it's called the market capitalization rate. This was the last time that the legislature adjusted this capitalization rate, and it's specifically used to determine, as part of the market use valuation for this big formula Department of Revenue has for these counties to determine how much money you pay on ag land. This last time it was adjusted, and so we need to basically, I believe, once again reassess what we're taxing for ag land, make that more parity wise, in line with other valuations of other property class types, and then we have the discussion about ad valorem.
Anyone else before I ask another question?
Oh, I have a question. Okay, if we're gonna have these golden years tax freeze, who is going to pick up the property taxes and the shortfall of that? Because I don't think young families can afford that. We need young families in our county.
Right. So when you look at the fiscal note of the golden years, it starts off very, very small. It's like $6 million for the first year, and it stair steps up basically year after year to about year 13, where we're basically your annual fiscal note on that program, Joanne, is about $80 million a year, which when you're talking a budget of about state general fund, I want to say what, 13, 14 billion. I mean, it's a drop in the bucket. In fact, when you look at the tax breaks we give the special interest, particularly on, corporation sales, investment tax credits, whatever, I mean, it's really nothing. Okay. The point is that when you look at the amount of money that the cities themselves are abating businesses, okay, if you're concerned about basically young families and what they're paying on property taxes, you better be really concerned about that just as much, if not more. You better be concerned about what the state is handing out as far as investment tax credits. You really need to be concerned about basically when we do special economic development incentives, in particular like star bonds and stuff like that.
I'm very concerned about that, especially in the northeast part. But is it supposed to be proportionate state in every taxing entity?
You mean with the golden years, ma'am, or what?
Yeah, yes.
No, the golden years applies statewide, and it's basically capped right now at 350,000. I mean, the legislature across the state voted for it over. I mean, they really liked it overwhelmingly, just because it helps everybody across the state.
Oh,
But,
I mean, I look at I look at my tax, and I can see the proportionate amount each, like the libraries and the school and the county property tax and the township and everything. Will it come off?
yes, right. It's basically proportionally coming up across all of those. Yes, that is correct.
Well, and it's nice because it's a freeze. It's not a.
Yeah, I mean, it's not like you're not paying zero
taxes, right?
Right. And Joanne, to follow up with that, see, so as you are say if you are a senior and say you enjoy this freeze, it keeps you in your home for say an additional 10 years or whatever. At the time then you sell your home, okay, it basically comes out of that program, unless the next buyer, he or herself, is either disabled, vet, or would be a senior that qualifies for that. But then it's going back to the county full tilt. Okay. And once again, keep in mind now, and my apologies, group, I should have explained this. This golden years, it does not affect your local units of government at all. What is going on is that it is a rebate. Think of it as a check that the state of Kansas sends to your county tax collector, okay, that contains the difference. And then so your local units of government, your library, your schools, everything, it's all held whole. Okay. It's just something that's coming out of the state's general fund pocket. Okay. And once again, a recognition that the state itself is basically providing these incentives, commercial tax abatements through various policies and whatnot. And so it's a way for the state to pay back into the locals. But to your concern, Joanne, this does nothing to hurt at all your revenues for your local units of government.
I have a follow-up on that particular policy or the golden years. So if a senior, meets the income threshold,
Right.
Less than or equal to 50,000, right? That's the threshold at age 65. And then when they hit 70, they start taking their required monthly distributions
Mhm.
and it bumps them up. Are they, and they're now, let's say, over 50,000, are they still eligible for the program, or are they out of the
Well,
program?
and this is getting into the weeds of it. So on the annual income portion, there is actually a COLA that we
Okay.
have baked into that. But yeah, it could be where, say, they start taking distributions or retirement, what income, you may have a year that knocks them out of the program. Or depending on how they do that. But I guess my point is that once you qualify, say if you got knocked out, say for a couple of years because you took some distributions or whatever, once you go back into once where you qualify again, it's not like you have to start over and requalify your, I mean, you still get to enjoy that old property tax bill that you were paying for years ago. But then you say you didn't enjoy that free, say, for the past couple of years. When you go back on because you met the income qualifying again, you go back to paying your old frozen bill. It's not like you have to, you're exposed to a new whatever you're paying now.
New assessment value, right?
Exactly. Correct.
Okay, well, thank you, Senator Holland. We appreciate you being here.
I appreciate the opportunity to represent the 3rd district, and just if you have specific ideas or things you'd like to see me pursue, as I said, I'm ranking on the Senate Tax. I'm also ranking on Senate Commerce Committee. My background is, once again, I run 4 businesses. And so if you have any business things, whatever, just give me a shout. My email address is tom.holland@senate.ks.gov, and appreciate the opportunity to be with your group tonight, and stay cool out there. It's getting hot.
I know. See, yeah, we're going to stay on and talk about rural Leavenworth Inc. business.
Very good. Thanks so much for the opportunity, guys. Thanks so much, Sherry. Good night.